So there are two models on GEMS. One is GEM Simplified and the other is GEM 6.5. If you haven't downloaded them, they're there in the folder. You could just do that, that'll help. Okay, let's start with GEMS. So first, a bit of context. So now let's take a quick look at GEMS case. GEMS is a really interesting story, both in terms of their timeline and the work that they've done, both as a case as well as the context, right? And if you remember, in Maya's case, when we started our discussion, we said Maya sitting in 2020, trying to wonder where they are, where things are going to be, which direction things are going to move with respect to the pandemic, and whether they're going to see any improvement or decline in demand, right? GEMS is in a very similar situation. And, like Maya, the locality again, the context again is Dubai. GEM's story starts in June 2007. So it's an old school. It's a school that's been there for a while and it's been around for a while, for a very long time. But in June 2007, Abraj, a private equity player, buys a 25% stake in GEMS for about $112 million. And their plan is to go from 35 schools to 500 schools globally in the next 10 years. That's the grand plan, right? But then 2008 happens. The economy takes a nosedive, not just in the Middle East, but across the world. There's a massive recession, lots of issues, questions, challenges, and everything comes to a standstill for GEM. So in 5 years later, in April 2012, Abraj says, we are done. Let's just wrap this up and create an exit for us. And that exit then becomes that, they've got a convertible debt. They just convert that into a standard loan, take some money out, and then GEM commits to sort of paying them back. So GEM then goes out and does two things. First, it goes out and as soon as the market opens, it raises a loan for about $500 million. And then it goes out and once it sort of improved its cash position, it does a listing on NASDAQ. There's a lot of demand for what's called a Islamic financial instrument called Sukuk from investors in the Islamic world. So GEM creates a Sukuk, a $200 million Sukuk. They create that Sukuk, issue it, and use the proceeds of that Sukuk to pay off Abraj. So Abraj is done, and GEM now has debt to the extent of $545 million here and another $200 million here, right? So that's about $750 million that GEM's added in a span of a couple of years. And the grand plan is they're going to sort of use this to grow, add more schools, expand, take full advantage of the revival in Dubai and the Dubai story, and grow and prosper. Then in October 2014, Blackstone, Fajr, Mumtalakat acquired 25% stake in GEMS, and the valuation is not disclosed. But what we do know is that they put in a significant chunk, and they've taken a 25% stake. In August 15, the loan amount has increased to about $820 million. And in 18, Khazanah, which is the Malaysian sovereign wealth fund, acquires a 3% stake in GEMS. So the objective, the grand plan, the design, the strategy, the PR, the disclosure, the positioning, the posturing says, GEM's going to do an IPO in 2018 at a $4 billion valuation. But 18 is turning out to be a really tough year. It's a hard year specifically for the Middle East, where things are not turning out as well as they expected. Growth is clearly slowing down. But more importantly, GEM's running into a lot of headwinds. So they shelved the IPO plan. And in 19, CVC, which is a private equity group, acquires a 30% stake in GEMS. So they put in about $1 billion in total, valuing the group at about $4 billion. And Fajr, Blackstone, and Mumtalakat exit. So they've sort of sold their shares. And then GEM engages banks to go out and borrow about $1.65 billion in debt. and another $800 million in additional debt, right? So they're looking at raising about close to about 2.4 to 2.6 billion dollars in total in debt. And then July 19, they actually issue the 2026 bonds yielding 7.125%. So that's the high level story of GEMS. Now, why do we want to work with the GEMS case? What's the reason? Why did we pick it up? So in Maya's case, we had a very simplistic model, a very simplistic business also. Not too many moving parts. You buy stuff at X, you sell it for 3X. You make sure that all your expenses are covered in that spread, in that difference between 1X and 3X. And you grow and you scale and you do it online so that your restrictions, your requirements, your constraints are limited. GEMS case is a fairly complex case, and from a modeling point of view, it's a lot more interesting and challenging case than Maya. But as I said earlier, in Maya or for Maya, our primary objective was to give you an initial flavor or taste, an exposure to some of the things, the tools that we use on the modeling side, right? So we went through the financials, we looked at the statement of cash, we ran cross checks, we tried to reconcile and balance our balance sheet, and we failed miserably at it. All of that was part of the flavor. We also explored data tables, we also did some analysis, we walked through the process of sort of tweaking, calibrating, adjusting, modifying our models based on our expectation of what we expected to see, right? So we've done all of that. So we're now in a good place, in a good space to look at GEMS.